Everyone loves a trier, except HMRC. Some people try to claim for everything and anything in their tax returns. We've seen a few crackers ourselves. However, every now and then HMRC reveal some of the worst expenses they've seen in tax returns. In recent years, these have included a 3-piece suite for a business owner's wife to sit on while he was doing his tax return. A very generous business owner bought posh watches for Christmas for all of the staff, despite not actually having any staff. Someone put Armani jeans through, claiming to be protective clothing while they were for their decorating business. Someone tried to claim flights abroad to get dental treatment because they wanted to look good in the business meetings. There was a claim for pet food for a guard dog, which sounded okay. It turned out the dog was a Shih Tzu, which could only frighten away very, very small burglars. Someone claimed underwear, okay for you in the full Monty, but not for the rest of us. And then there was someone who claimed their garden shed, and also the cost of the part of the garden it sits in. As you can imagine, none of these are accepted. The phrase that HMRC have traditionally used is that the expense must be wholly and exclusively for the purposes of your business to be allowable for tax relief. But what's this mean? Well, at its simplest, ask yourself, would I be spending this if I didn't have the business? If the answer's no, then it's likely to be an allowable expense. So common examples would include stock, the items you're buying to sell on or to use to make your products, the premises costs, your business rent and the cost of light and heat for your business, also any repairs to those premises, the staff costs, wages, salaries and the cost of subcontractors, general office costs, the stationery, the tea and coffee, your travel costs to and from meetings and appointments, IT costs of websites, computers and software, advertising costs, and then the business assets. The method of claiming the tax may be different, but any assets you buy get tax relief, vans, furniture, machinery. But then there are also a lot of grey areas where you have costs that you may have spent without the business, but you can now claim. HMRC are pretty sensible on these. For example, you can claim for a mobile phone. Often assets within businesses are used for both business and personal uses. So what can you claim tax relief on? Well, it's only the proportion of business use of these assets that can be deducted as an allowable expense. So as an example, Julie's a self-employed beautician. She uses a mobile phone for both private use and business-related calls to contact clients. For the tax year, phone bill was £520. 60% of these calls were used for contact with clients and 40% were personal. So when calculating allowable expenses, Julie can claim 60%, i.e. £312 for business use. Then there are capital allowances on business assets. Again, only a proportion of the asset that's used for the business can be claimed. So again, another example would be Dan's a self-employed electrician. In his first year of trading, he purchased a brand new car costing £15,000. It's got CO2 emissions 110 grams per kilometre, and the car's used 75% for business use. Now the car's placed into a single asset pool as it's a dual purpose usage, and he can have a capital allowance on that of 18%. So in the first year, he gets a capital allowance of £2,700, or 18% of the 15 grand. But only 75% of this is allowed for the business. So the capital allowances in year one is £2,025, or 75% of the 2,700. And then there's working from home. If you operate your business from home, you can deduct certain expenses that relate to business use. So these can include the phone, internet, electricity, gas, council tax, and the cleaning costs. All the costs must be apportioned into business use at a reasonable rate. Or you could use the simplified expenses. These allow you to claim deductions on expenses used at home for work purposes and mileage costs at a flat rate, i.e. instead of keeping the receipts and working out business proportions. You can only do this if you haven't already claimed capital allowances, but it saves you having to keep detailed records of expenses and estimating that business usage, which is particularly difficult in your home. In summary, it comes down to common sense. Is the expense really for the business? Some of the ridiculous claims can actually be okay if they were genuinely for the business. For example, it's okay to buy gifts for your team if you have a team. So if in doubt, ask an expert. It's what we're here for. Now I'm just off for a meeting with HMRC in Hawaii.